What's the crack, everyone? How are you? I thought I'd come on today and do a little video on, say, the Nasdaq, the market crashing, so on and so forth. In my little sort of chat room, I'm getting an awful lot of people worried about: is the market going to continue dropping? Is it not? So on and so forth. So I wanna sort of talk to people about the market cycles. Okay. So first things first is we have a normal cycle when this happens. So this is a normal cycle when the market goes up, then it comes down, and then it goes back up again. So that's a normal cycle. Okay. So this pullback here is called just a normal, it's just a pullback. Okay. It's just called a pullback. That's what it's called. It's not, we don't need to, so pullback slash retracement. So that's what most people call this. It's a pullback, retracement, and this is when the market is working normal, when it's doing what it should be doing. Now, at this present moment, we're getting something that's a little bit further. Okay, so I'm just going to put this here. So that there. Now, a normal pullback here generally is about a 10% retracement. Okay, so from the market, it's usually about 10%. That's the ideal retracement from the high. That's what we like to do. So if I get the ruler here and I put it on the top, so we're on the NASDAQ, so I'll get the NASDAQ and I move down 10%, which is there. So that's where that place should be. Okay, so that's where that line should be. Normal retracement should be there. Okay, so if I get that, put it about there. So that's the 10% mark. Okay, now, what we then get, okay, so I'm gonna move this down and I'm gonna put it there. Okay, just right on top of that there. So we sort of know what that is. Then what happens is that at this present moment, we're getting this that's happened. Okay, so we're getting a bigger than usual drop down. Okay, so we're getting a bigger than usual drop down. Now, it still hasn't taken out this low, so there's the previous low, so it still hasn't taken it out. So again, I haven't taken that low out here with this level here. If we look at this low, I haven't taken out here, and that there is still a normal, that's still a normal pullback. Now, on that, this is now, it's called a retracement. Okay, it's now called a correction. So can we have the pullback retracement? This is now called a market correction. Okay, so we now have a correction. Now, a market correction is usually about a 20% drop. Okay, so that is a market correction at the minute. All right, so if I pull this down here, pop this up, and I get the ruler here and I measure, okay, from the top down 20%, which is there. So at the bottom of this one here. So I'm gonna get another line here and put it underneath. It's about there. So that's that one. Okay, so that's the next sort of milestone, is that a market correction. And then the last one that we get is this one. Well, can anyone tell me what this one is? And this is the one that's most publicized across the internet. It's most publicized across the likes of Bloomberg, any of those. It's the one that's most publicized. Anyone know what it's called? And that one's called a market crash. And this is usually about a 30% drop. Now remember, I'm talking about usuals. I'm talking about normal historical crashes, so on and so forth. Now you do have bigger ones. You have the likes of the dot-com bubble. You have wars. So you've had bigger crashes, but normal crashes. We're just talking about the market norm. Okay. Now if we get a 30% pullback here, so there is a 30% pullback right there. So I'll get that through there, zoom out a little. So that's where the 30% mark is going. Now, so they're the three sort of areas that we're looking for. So there's the market crash. Now, at the minute, we have a little bit of negativity because we have Donald Trump and his policies on tariffs. So tariffs are driving the market in a particular direction. So at the minute, we have tariffs. Okay, so we have tariffs at the minute driving the market. Now, what else is driving the market? Is there anything else driving the market? Well, overbought. So that's one of the things, isn't it? Overbought. Anything else driving the market? Well, we have the AI revolution, isn't it? So AI with DeepSeek, okay. So that sort of come in and disrupted the market. But overall here, there's not a whole lot of negativity on the market other than the tariffs, because the AI and DeepSeek, that's sort of there. We've had that. We've had this. It's that sort of played out a little bit. Okay. We have the overbought, which is we're in this normal area for this overbought now. It's to be done. So the only thing that's driving the downside now is the tariffs. So it's with these tariffs. How do we sort of rectify that? And the only thing is sitting it out. And how we do that is from by dollar cost averaging. So what we do is from between 20% and 30%, we buy at certain areas. So we dollar cost average in. So you're looking to get in, your first entry will be there. The second entry would be here. The third entry would be about here. Then the fourth entry there. And then the fifth entry will be down here. Now, and why this is so good. So just imagine you have £1,000. You put 100, 100, 100, 100. That's 400 quid. Now you could put your 600 quid in here, or you could put in another 100, 200, and then if it goes slightly lower, you put another one, and then as it turns to the upside, you put the rest of your money in as it's starting to turn. Okay, so that's called dollar cost averaging, and how most traders who have underlying assets, dollar cost average. So that's what most traders outside of who have underlying assets, that's what we generally do. We dollar cost average in. And what we do is we go from there. Now, statistically speaking, if we look at statistics, the market only has about a 7% chance of going below 30%. So have a look at it that historically going past, it only has about a 7% chance of going lower. So yes, the market can go lower, but we're at a point where we're down about what, 14% was the low. It looks like we're down about 10 or 11% now. The question is, will it hit 20? Will it hit 30? And if it does, are you positioned correctly to start buying up the likes of the stocks and the indices? Let me know in the comments below.